So the big tax question is this: how do wealthy people keep their money working for them when selling their business, real estate, or other highly appreciated assets without paying hundreds of thousands to millions of dollars in tax? What if we, as business and real estate owners who have poured blood, sweat, and tears to growing our wealth, and who didn't hire expensive tax attorneys and CPAs to map out an exit strategy, knew their secrets? Instead of recreating the wheel, why can't we just model the way they deferred 30 to 50% in tax, paid off debt, funded their next business dream, and most importantly, leave a financial legacy to give to the causes we believe in most? What if their secrets weren't complicated at all, and you just need a guide who is a few steps ahead of you? That is the question, and this podcast will give you the answers. My name is Brett Swarts, and welcome to Capital Gains Tax Solutions. All right, welcome to another episode of Capital Gains Tax Solutions podcast, where we believe having a capital gains tax deferral solution to solve any challenges you're facing is the best way to help you create and preserve more wealth, especially when you're selling highly appreciated assets such as a business, commercial real estate, high-end primary home. Hey, our next guest is an absolute rock star specialist. You know, let's face it, most high net worth individuals, they struggle with finding a capital gains tax deferral expert, as well as a certified financial planner who specializes in tax savings and capital gains tax deferral. This guest has spent the last 15 years in the financial services space, helping clients solve big tax problems with advanced strategies around income and capital gains taxes. He has been featured in many national media outlets, including Orlando Sentinel, The Wall Street Journal, ABC, NBC, CBS, Fox News, CNBC, Digital, Bloomberg, and Investment News. You can find him check him out on LinkedIn. It's probably the best way to actually connect with him. It's Matt Chancey, CFP. Hey, Matt, welcome to the show.
Hey, thanks for having me, Brett. I really appreciate it. You made me sound your introduction was awesome. Made me sound way better than I actually sound myself. So, hey, I think.
Hey, if you can help someone save $1 million in capital gains taxes, I'm sure they would approve of the description. And that's really what we're focused on this show, is bringing on experts like yourself who have actually been in the trenches with their clients to do just that. So would you give our listeners maybe a little bit about your story and then sort of your current focus now?
Sure, not a problem. You know, I've been in the business for, like I said, about 15 years, and I probably started off on my journey a lot like other financial advisors, so to speak. You know, you get the top designations and you go out and you're helping clients plan. And originally I was planning around what's the primary liquidity event is a 401k rollover. And it just wasn't ultimately as fulfilling as I wanted to be. It wasn't intellectually complex, and it wasn't stimulating for what I wanted to do. And I was like, I got to find something more interesting, right? So for me, it all came down at the end of the day was, you know, we all want to work with larger clients along the way. And the gateway to larger clients, I feel like, really is taxes. So it's investments, insurance, retirement, estate, and taxation are the 5 core pillars of planning. But the only one that provides an instant gratification to a high net worth client and speaks directly to them is tax planning. And once you do that effectively, it opens up opportunities to have conversations around their insurance, investments, and retirement. And for me, that was kind of the path that I started walking down. It started putting me in front of the clients that I wanted to talk to, working with their current strategic centers of influence, and just created a practice around the liquidity of selling big assets as opposed to 401k rollovers, which I feel like allowed a lot more planning opportunities. And that's kind of where I've settled.
Excellent. And before your success on helping all of these high net worth individuals and being on all these major media outlets and really educating a lot of people on these strategies, I'm curious, who was Matt growing up? In other words, not just who you were, but more so what strengths or gifts were you given, and how is that connected to how you help others today?
Okay, fair. Wow, we're getting deep. So, you know, I grew up pretty normal. I mean, my parents, I'm not even sure they both graduated high school, you know, just very simple. But I was always decently athletic. I ended up getting a football scholarship, which got me to college. And University of Central Florida, go Knights. You know, we're finally now people know who we are. It only took 20 years for me to wear my letters to an airport and have those letters be recognized. So that's kind of a blessing these days to be relevant. But I think when I got to college, I realized that, athletics is what got me there, but academics was going to open the next chapter. And it was really what was going to take me to that next level. And so, I changed my focus from a competitive nature from the athletics more so to the academics, and kind of really tried to, find a path that made sense for me. My undergraduate degree was in legal studies. I thought I was going to go be an attorney. And, which makes me good at reading legal contracts today. So I do get to use some of that skill set, but kind of took a pivot along the way, and ended up, kind of going in a different direction with a different path. And, I think in primary schools, we don't teach enough about fundamental finance, especially in my household. We didn't teach anything about fundamental finance because we didn't have money. So you don't have to worry about finances if you don't have money per se. So it's been a journey with me kind of learning that, and then how to transition that to my clients and in the relationships, just, helping people make good financial decisions one step at a time. Don't overthink it. And I many times tell clients, clients think it's a what. It's always a what. What do I do? What do I buy? What strategy are we going to implement? And I say it's never a what. It's actually a who. Who am I going to partner with for the rest of my life to help me make good financial decisions? Because a good financial decision isn't a one-time event. So that's kind of the path for me. And then it's just, I have that personality. I'm a natural self-starter, and I'm intellectually curious. So I'm constantly consuming information and going to different conferences, pushing the limits of things that I can learn, so that ultimately I can better serve my clients.
Love that. Yeah, it's not a what, it's a who, and it's a relationship that's going to help you bring you to whatever next level you're trying to achieve. Another way I've heard it put, it's don't be the how, hire the who, right? Or partner with the who, or get coached or mentored by the who to reach your vision, because your vision's here and you're here. And if you always just try to be the how yourself, you're going to get stuck in procrastination and frustration because you're not an expert there. But if you can find that who to achieve that bridge to your vision, you can get there much faster and probably more successfully as well. So before your success as a not only as an athlete and then as an educator, you became a financial planner. And you touched on this in the beginning. You were more focused on the, let's say, the traditional way of financial planning, which is the 401k and some general tax. People kind of know this, but the capital gains tax deferral part, I'm curious, at what point did you say, okay, I'm all in on helping people with capital gains tax deferral? Walk us through that transition.
So I guess where that came from was, trying to get in front of, you want to work with bigger clients. Bigger clients typically have assets. Those assets are typically accumulated due to the restrictive covenants of qualified plans. You can only shove so much money inside of a 401k or an IRA. So when you look at larger clients, they tend to hold most of their assets outside of qualified plans. Therefore, when you're selling them, you're getting a more favorable tax treatment over ordinary income as capital gain through a liquidity event. And you would think that your tax attorneys and your business brokers and your commercial real estate consultants and your CPAs would have specific knowledge around those parts of the tax code to help mitigate that, but they really don't. It's just not the way they're trained. My first tax training came with H&R Block years back. I was like, when I wanted to dive into it, I was just like, okay, how do I learn the language of tax? And because that's really what I considered it, a language, to be. And I kind of tell this in a funny way, but I don't mind sharing it. If I walked into a restaurant and there was a really pretty girl at a bar and I wanted to talk to her, but then realized she spoke another language, I would be super frustrated if I couldn't talk to her. Well, the pretty girls in the financial services relationship are the CPAs standing in the way of the really good clients. And so until I learned their language and how to communicate with them, there was really a barrier there. And so, getting on their page of that fundamental training, and then being able to advance that even farther to be able to find the pieces of the code that help work around that piece of the solution was where I really started to fixate, my education and my learning. And it made a big difference. It's frankly not stuff that the big wirehouses or the big brand brokerage firms focus on. So it creates a a blue ocean opportunity. I went to grad school with 19 people, and they're all with big firms, and none of them use these type of strategies. They are more than happy to let their clients pay full capital gains taxes and depreciation recapture and everything else, and they celebrate a liquidity event even after paying millions or tens of millions of taxes, and then they'll diversify it into a stock and bond portfolio. And I'm just like, if you knew there was a better way and you're not doing it for your clients, what are you doing? But the firms just don't allow it. So it is what it is.
Yeah, I have a similar kind of story with Marcus and Millichap, and it was a big investment real estate company helping people buy and sell commercial real estate properties, and kind of faced a similar, I would say, more sort of neutral to negative. Some people were more positive, but for anything that's outside of the traditional 1031 exchange, being that this is the primary way in which commercial real estate brokers earn income through not only commission sales, but on the next deal, right? When you get the next up leg. And it was only a few of us, although I was actually introduced to this for the first time through our manager, who was the head of the office of Marcus and Millichap in Northern California in the first place, with being the deferred sales trust or alternative tax deferral strategies. But in your experience, what is the biggest reason? Because I think that's really a big elephant for a lot of people. They say, hey, this sounds too good to be true, whether that be a deferred sales trust, whether that be, sometimes even charitable remainder trust. Sometimes it's, Oz qualified opportunity zones. Some people are still learning about the 1031 exchange who are not in the world. What is the biggest reasons why some of these either larger wirehouses or larger institutions, in your opinion, that are resistant to it?
Well, I think everybody has a unique reason of why they're resistant to it. And I would say that from a commercial real estate space, they feel like using a tax mitigation strategy could potentially, number one, slow down their potential closing and cost them the commission on this transaction, number one. Number two, it might cannibalize the asset from them so that there's not anything remaining for the up leg of the next transaction. So they're not looking out for the best interest of the client. They're looking out for the best interest of themselves in that particular deal. I think that's very common in the business brokerage world and in the commercial real estate space. From the tax attorneys and the CPAs that I've worked with and trained on these type strategies, that's just not the way they were taught. They focus on structuring and the billable hour components of it. Is there entity shifting that can potentially be done? Any discounts we might be able to establish. I mean, they're looking at it from a completely different perspective. They are unfamiliar with these pieces of the code and or other products. Timing shifting, IRS code, tax advantage products, and discounts are the ways that you reduce taxes. And all those other type professionals really lack knowledge in the tax advantage product space, because that's not how they're compensated. So if there's no way to generate revenue there, why would they know? And for me personally, I've become successful because I figured out the way or learned the way that they were all compensated and they were all paid, because I asked them. And then, when you understand, how they're scratching their itch, then you can understand why this isn't something that they're interested in. And I do have a little bit of a unique perspective. My dad was a contractor growing up, and so I've actually been a general contractor for 20 years. So with an undergrad in legal studies, a graduate degree in finance, a general contractor, I understand how real estate gets built. I understand how it gets paid for. I understand how it gets sold. I understand the taxation because of the tax training and stuff that I have. So I never knew what I was going to be when I grew up, but my skill set kind of lends me to believe to really understand this space in a way that most people just can't.
It's a unique perspective and background and experience of the real estate world, the finance, and now the taxation. And you're right. If a CPA or a professional is not trained, whether it be a business broker or 1031 exchange, commercial real estate broker, if they aren't seeing it being done and they're not seeing people making money on it, then they're going to keep doing what they've only been seen to do. And I imagine that's perhaps how a lot of commercial real estate brokers started out in the 80s, right? When the 1031 exchange starts to get popular in the 90s, when it really picked up, and in the 2000s, some jumped on and some understood it and some ran with it and some delayed. But until someone models and shows it and shows the closed deal spaces on really helping the clients, and then second, of course, putting the client's interest first above your own, it's hard to get motivated to move to the next step. So curious, maybe we can share a couple deal stories that you've done, and maybe some recent ones and some creative ways that you've helped people defer capital gains taxes. What are maybe share one or two that come to mind to inspire our listeners and kind of give maybe some structure and some ways to do just that.
Sure. And it's funny is I'll start with one that I did not get to work on, but just recently I was working with a tax attorney who also owns a title agency and was closing a transaction, the sale of a marina that a family owned. It was $37 million that they sold this marina for. They did absolutely zero tax mitigation on that whatsoever. Potentially cost that family close to $10 million in taxes. And, I don't know about you, but $10 million doesn't grow on trees, right? So to be able to preserve that, and build additional family wealth from it, I feel like but the tax attorney was completely oblivious to the types of strategies that we've discussed here today, and highly respected in their community. Everybody knew who they were, but unfamiliar with these type of transactions is just not the type of work that they do.
Let's dig into that a little more. Let's dig into that a little more. So
sure.
I found that too. It's the trusted advisor who's been in the community, and in other words, it's been the general practitioner. They've helped them along their whole entire, call it wealth plan, but it was using the health plan. They took their blood, right? They gave them the general medicine. They help, maybe do help a broken bone they broke or their kids broke. And so there's this level of trust and emotional connection that if they don't know, then it maybe doesn't work, or it's not legal, or maybe I shouldn't do it. And then you couple that with an emotional state of, I'm selling my biggest deal probably ever in my lifetime, and I'm afraid of the tax man in case I do something off. And that's kind of the perfect storm for people to have fear and let the fear grip them. But walk us through how perhaps what's the best way to educate and get these CPAs knowing these things and get them comfortable with it. Are there any things that you found that either the high net worth client can do who's listening right now? What would you tell them to do to at least have their CPAs vet the strategy, vet who you are and what you're doing? Walk us through maybe some tips on that.
Well, I think one of the biggest issues is so if you look at the professional landscape of comparing and contrasting the skill set and the credibility of an attorney and a CPA and a financial advisor, right? CPAs and attorneys both have a graduate, an undergraduate and a graduate degree. They both have passed a very rigorous exam that says, hey, I'm qualified to do this thing. Whereas financial advisor is technically a generic term. And we have guys out there running around in our industry that have 30 days worth of licensure holding themselves out there as experts. And I think that damages the credibility of people that actually can execute on what they're doing, because we don't have a higher minimum standard, And so when a CPA has heard a financial advisor knock on the door before and say, hey, I can help you with tax strategies. Well, unfortunately, he might have said, hey, did you know putting money into an annuity is tax deferral? That's a true statement, but that's not the type of thing that's really adding value to the clients in our scenario. And if a CPA or an attorney has heard those stories too many times, the next time when a guy walks in can add real value, they just kind of, they look down upon it. Oh, I've had financial advisors come at me before. So I frankly feel like, one of the things that holds us back is being framed or pre-framed as a financial advisor. It almost is a negative. Because financial advisors tend to be viewed as not problem solvers, but product pushers more times than not. And, if you're not coming in with, a holistic solution. So, the way I've explained what it is that I do is, yes, to some extent, I am a financial advisor. I have way more credentials than most, but I still look at liquidity. I still look at cash flows. I still look at legacy concerns. Is this live on money? Is this leave on money? And what are we trying to accomplish? And I go, but now I solve those problems using much more sophisticated tax-focused tools than anybody else is going to bring to the table because I understand how they work. And so I'm solving the same problems that somebody else would solve for. I've just got a more sophisticated toolbox because I'm better trained. So I think that those CPAs and those tax attorneys along the way have frankly run into so many low caliber financial advisors that they're at the point where it's almost like a cry wolf scenario. They're like, yeah, I've heard it before, and they're not willing to listen. So, for me, I speak nationally at conferences all over the country, and that changes the paradigm because if I'm in front of a room full of a whole bunch of people that are considered professionals and I'm speaking and I'm educating on this, that's elevating my status, and then I'm teaching the whole room. So at that particular time, they're like, well, maybe there's something I don't know here. And I need to find out more about it. And that's what's made a big difference for me. I know everybody hasn't been afforded those type of opportunities, but that's what's kind of worked for me.
Yeah, I love it. And then, and that's really what it comes down to is being in a position to close deals and speak and educate and build a network of satisfied clients who can ultimately share the successes, and hopefully the CPAs are open to it. I would also add, if you're the high net worth client, to actually, just be early on these things, right? The toughest time to close deals, especially presented with new opportunities, is, let's say, the last 30 days or deals about to close, right? You're so caught up in the emotions of the sale and making sure you get the high price, let's say the $37 million marina deal, right? They're so focused on that. It's hard for them to get outside emotionally for something that's so brand new that's, maybe sounds too good to be true. Why didn't I know about this $10 million tax savings? So be early, pre-plan before you even go into escrow what your tax deferral strategy is going to be. And then present that there and make that almost like a separate escrow. That's your first escrow. Figure that out before you go into contract and execute on that high price and the best terms with that buyer. In fact, we're doing a deal like this recently. It's actually around a $40 million deal for a business sale. And it's exactly that. They pre-planned, and the first buyer wouldn't cooperate for some reason. So they just dropped the first buyer, went to the second buyer. But before they went into contract with the second buyer, they said, hey, look, we want to make sure that you're okay with this tax planning. That shouldn't affect the sale whatsoever. All the warranties and everything will be the same, but it's going to help us tremendously to build wealth and to defer tax. And they said, yes, no problem. And that was the choice there for them. So curious now on the next step, Matt, after helping countless investors, educating, CPAs, business brokers, commercial real estate brokers, speaking, what are some of the top, one or two ways that you found is the best way to create and preserve wealth?
So I think first and foremost, you've got to get out in front of it with a plan. So the pre-planning part is extremely important as far as creating wealth. So I would say, engage with your business broker, your commercial real estate person up front and say, hey, are there tax mitigation strategies we can use? Let's put those on the table. Let's discuss them now. Because if they're using it in their listing presentation, you're going to get more listings, you're going to get bigger listings, and you're going to close sales faster, right? So if you get out in front of it with your listing presentation, that way you're not kind of ambushing the client coming back later saying, oh, hey, by the way, we've got some tax mitigation strategies. Just put it right on the table when we start. This is part of what we do. This is part of who we are, right? It's just more value that you're driving to the client. So I would say the earlier in the process, the better. And I'm a big fan of stacking different strategies together. I do 1031s. I work in the Delaware statutory trust space for DSTs. So if I'm working on a business owner sale and there's a real estate component to the sale, I absolutely don't mind bifurcating and pulling that piece out of it and using, that potential piece of the code, the Delaware Statutory Trust. It's a great tool for cash flow if that's what they're looking for, that best fits their scenario, preserving their step up. Great tool. Big fan of using opportunity zones. If somebody needs, you're allowed to bifurcate and pull your basis out of that deal. So if a client needs cash now in their hand and they have some basis in the asset, from a planning standpoint, that it carries a lot of value, right? And then 453, under 453, the installment sale code, there's a few different structures out there, but, if you're looking to, defer that tax, and if you understand the concept of time value of money and net present value, then it's much easier to pay for those taxes in future dollars at a discounted rate. So look at the 453 strategies and see how those might work for you. They can let you potentially diversify into some different asset classes if you're looking to get out of real estate. Because sometimes people have been in real estate and go, hey, I just don't want to mess with this anymore. I want to be in something else. So there's a lot of tools out there, and they can be used together in an additive fashion, and you get way more bang for your buck that way. But it takes some training and it takes some learning, and sometimes I hate to say this, but there's an old expression, it's hard to teach an old dog new tricks. Well, many times the clients that we're working with that own highly appreciated real estate or businesses, frankly speaking, they're old dogs. They've been doing this one thing for a long time and have created a massive amount of value in their business. But at the 12th hour right here, we're coming in and they're just unfamiliar with this type planning, even though based on the code statutorily, they've been around for a long time on the books. And I get a lot of pushback today about opportunity zones not being around on the books for the long time. But let me tell you something. It's built on partnership law. Partnership law has existed for a long time, and it was piggybacked off the other type of programs that have been around in existence for a long time. So it's not like it's completely new and completely foreign. Just the way that they put that together is a little bit new. But partnership law has existed. Limited partnership structures and pass-through tax benefits have existed for a long time. So it's not really as new as people would like to make it out to be. It's just a lack of understanding.
Yeah, I couldn't agree with you more. And those are some really good insights. And I liken it to sort of like a CEO or founder of a company who takes it to the first $100 million for, let's say, 5, 10, or 15 years of blood, sweat, and tears, and has been able to get to that $100 million, but he's kind of capped out and he's got to almost step away or take a different role to take it to $1 billion company, right? And it's hard because in a sense, this is the way I've done it for these past, what are you telling me? I've succeeded. And no, you absolutely have succeeded. But now that you're exiting, or now that you're looking to make a shift or a change or a lifestyle change or more liquidity or less debt or more diversification or whatever it might be, you may need to take a different role and use a different team. That's the other thing too. Sometimes these CPAs, they help them to get to the $100 million level. So they have a lot of credibility and a lot of clout. But they've been helping with, let's just say, the general part of the business, not the brain surgery, right? And this is where hired the brain surgeon, who's the CPA tax attorney who specializes in that part of the brain. Because a CPA can be very different. Each can have their own niche and their own ways of doing things. And just because, like a doctor, there's general doctors and there's surgeons. So you're not going to have your knee surgeon do your brain do your knee. So figuring out and getting out of the way of one size fits all approach for my financial advisor, my CPA, and more so, who is the specialist that's going to help me based upon the needs and goals that I have. Any other thoughts on that, Matt?
No, I 100% agree. I don't think, it doesn't mean the attorney you've worked with or the CPA you've worked with all these years that help you build your business is bad. It just means you're an anomaly, you're an outlier, and you grew your business or whatever it was so successfully that you basically outgrew them. That's not how they make their money, by helping businesses structure properly to be able to sell to minimize the tax effect. It's the billing, the reporting, the compliance work, the accounting, the payroll. That's how most of them are making their money, on the singles and doubles of the businesses. They're not structured in a way to really add massive value to a client relationship through a liquidity event. That's just not their business model. But I think trust and, sticking with who got me here sometimes has a lot to do with it. I lost, it's kind of funny. It's easier to talk about deals that I've lost than deals that I've won sometimes, because I try to learn from all those scenarios, right? And I lost a client recently in Atlanta, was selling a business for like $41 million. And, his objections were, Nobody's on my team's heard of this. I've interviewed 3 other big brand name firms. My presentation was hands down, in his word, 300% better. But he found it impossible to believe that those other big firms didn't have talented people that didn't know what I knew. And he goes, I can't risk it. I have to play it safe here. This is my life savings, my life work. I'm 64 years old, and I'll pay an unnecessary $10 million in taxes just to know that everything's going to be okay. And I'm like, I get it. I understand, that's a big price to pay for ignorance, I guess. But, I understood. And so it's, you get these once in a lifetime opportunities. And if the people around you aren't giving you the best advice, if that's not your area of expertise, it's hard to tell. This guy was in the software business. I would have never known if somebody comes in my house or my office trying to sell me software. I wouldn't know if they're telling me the truth or not. They could be pulling the wool over my eyes and charging me 10x on something because I don't know anything about software, just like this guy didn't know anything about finance and tax. But, getting to the point where you can have a $40 million exit doesn't make you a financial expert by any stretch of the imagination.
Absolutely. And well said. That's so much wisdom there, and encourage the listeners to do your due diligence and be early and then ask the tough questions. And the other way I say it too is, Matt, someone needs to pay down the 23 trillion. So we got to have a lot of good Americans to pay that down. I just hope it's none of my clients or none of my friends or family, and that so we can give more to local things that help us, or more to charity if you want to, right? Versus the government kind of wasting that wealth away pretty quickly. But someone needs to pay down that 23 trillion. So, but no, that's a little bit facetious. But at the same time, it's serious, right? Because that's serious wealth that can help a lot of families and a lot of people, whether it be their own family or future generations. And but sometimes you're right. It's the fear or the thought of not knowing that other people don't know about this or didn't tell me about it overcomes that total amount of tax, which is absolutely their decision to make. But it is one of the toughest ones to face when you put your best foot forward. They love what you say, but they just can't quite get over the fact that they hadn't heard of it, or their other advisors don't say yes to it. So shifting there a bit, you're obviously a wealth advisor. You're a tax expert. I'm curious, some of the other professionals that you work with, right? Business brokers, commercial real estate brokers, realtors. What have the best ones have done to work with you to leverage their business so that they can grow their business and their influence?
Sure. I would say, kind of back to a previous comment, is made it part of their process from the beginning. That way it doesn't feel like you're kind of bait and switching the client. You're telling them up front. I mean, listen, if you're on a listing presentation, your listing presentation, they all say the same thing. Hey, guess what? We're going to determine fair market value for your asset, whether it's real estate or a business. Number 2, we're going to bring you a bunch of highly qualified buyers. And then they make the biggest mistake ever, number 3, by saying, you should go back and talk to all the other professional advisors you currently work with to determine what your net proceeds from sale are going to be, because that's not what we do. And that in and of itself right there is where they make the biggest mistake. If they would just say, listen, we have some professionals that work on our team as part of a capital asset transaction to help mitigate taxes. They can work in tandem with your current professionals, or maybe you realize that these people need to supplant some of your current professionals because they can add more value. But that's something you need to determine on the front end when you're going through the transaction, and they'll be more than happy to give you a free consultation. So my phone rings all the time with phone, calls and text messages of saying, hey, I've got an owner that's thinking about selling, can you give them 5 minutes on the phone and introduce the concept to them? And I absolutely don't mind making myself available, because if they're doing it in the front, they're winning those listing presentations because it's clear that they're going to add way more value. At the end of the day, we can take less on the ultimate sales side, from an offer standpoint, because if we're mitigating the taxes out of the deal, the client's still ultimately going to walk away with more. So it allows us to not have to fight for every last penny in that contract, which sometimes causes a deal to go south.
Yeah, I couldn't say it better myself. That is great advice. Be early and add value. Really, that's at the center of everything we're doing as financial professionals who are trying to help people create and preserve more wealth, is adding value. and what is your value proposition as a business professional, and how are you actually going to help somebody save a failed 1031 exchange, defer hundreds of thousands to millions of dollars of capital gains tax, gain liquidity, pay off debt, whatever, fund a charitable charity that you have a passion for, whatever it may be. Present some of those ideas up front early, so give the client time to actually, pick and choose, or kick the tires on them, and then make a decision versus throwing it on into them in the last minute. So this is great advice. We're going to do a lightning round and then have one last question. Are you ready for the lightning round, Matt?
All right, boom, lightning.
Here we go. Maybe your favorite book you've read over the past 6 months.
Favorite book that I've read over the past 6 months. You know what? I read a book recently called The Miracle Morning. And it was about, setting your mindset and your tone first thing in the morning, building in time at the beginning of your day before you get buried, and building a structure, whether it's meditation or gratitude or going to the gym, and just getting in those things that are good for you mentally, emotionally, and for your soul, and build that in and letting it set the tone for your day. And, I think maybe we do some of those things subconsciously, but like creating a blueprint for it where you can almost follow through. That was maybe very fundamental stuff, but it was a good takeaway for me.
Excellent. Favorite podcast you're listening to now?
Impact Theory. So I like it. The guy that runs it, his name is Tom Ballou. He's constantly interviewing a bunch of great people on there, in all different phases of business people, different types of entrepreneurs. They also cross over and go into a little biohacking and stuff, because, hey, if you've your health and your wealth are directly correlated, right? If you've got bad health, it's going to negatively impact your wealth. And if your money goes bad, it's going to definitely destroy your health. So, he looks at it holistically from both sides. So Impact Theory, I'm a big fan of.
Excellent. Miami Beach or Clearwater Beach?
It depends on how much nudity you want to see first and foremost. Miami Beach is kind of a freak show, but it's fun. But if you want to chill and you want to relax, I would say Clearwater Beach. And it's an easier commute. I'm closer.
There you go. Business sale or commercial real estate sale? Best one for your services to defer capital gains tax. What's your favorite?
You know what? I think you can add value equally in both of them. So I don't want to necessarily ride the fence, but the business owner or the real estate owner is the one that really makes the difference, because those are the people that we're working with. Those are the people that we're serving. And if they're open-minded, and I think, like you said the whole time, we know that we've got a major tax or debt problem in our country. But we also know that local, state, and federal governments are terrible reallocators of capital. So, high net worth clients want to have more control over where their dollars, and specifically their tax dollars, go. And this is a way for them to be able to do that. So people that want to plan around that, those are great people to work with.
Excellent. Hey, that concludes the lightning round, and we're going to finish with this last question right here. And it's actually probably the most, my favorite question. I think our listeners' most impactful question too. And you may have answered it in your favorite book you're going on right now. But how do you, Matt, stay centered in your values and then stay encouraged to charge forward to reach new goals?
I feel like sometimes when you have to figure out what your higher purpose is, or I think it's real estate analogous, right? Like highest and best use is a concept that you hear used all the time in the real estate space. And I think as humans, we have to figure out what's our highest and best use. Whether we look at that from a spiritual standpoint, obviously you see guys standing out on the corner every once in a while with a megaphone holding a sign saying John 3:16. They feel like that's their highest and best use. That's their calling. That's why they're doing it. Or it's with your family, right? If that's your highest and best use, being a great husband, being a great father, right? So you have to figure out what your highest and best use is, and then tap into those skills that allow you to be able to deliver that to whoever it is, if it's to serve your faith or serve your family, or serve your clients professionally, or take more of a balanced approach. I struggle with balance. I'm really good at filling up one cup at a time. I'm terrible at trying to fill all cups at the same time, but I'm working on that. And so, we all have strengths. We all have weaknesses. So, I work on that every day, just like everyone else.
That's a great answer, and I appreciate you sharing that. And so I want to thank you for being on the show, Matt. Again, you can find Matt Chancey. Just go to LinkedIn, search Matt Chancey, CFP, Certified Financial Planner, but just CFP by itself, and he'll pop up, and you can add him and connect with him there. Matt, any last words for our listeners before I let you go?
I tell people, I get asked all the time by professional colleagues in our space, so I volunteer some time in the criminal justice system. I'm with the Department of Corrections. I'll go in and I teach finance to pre-release felons, and I go back and I teach at universities for the kids and stuff all the time that are getting finance degrees and don't know what they want to do with it when they grow up. And I always tell them, the more you learn, the more you can earn, right? Because you're driving value. And I think that statement is simple, but I think it's also applicable to clients, right? Like, don't stick your head in the sand and act like what somebody's telling you doesn't exist. Because if you stick your head in the sand, don't forget, we can still see your butt. So, get out there and learn something.
I love it. I love it. Yeah. Stay humble, stay hungry, and stay open-minded to learning something new so that you can create and preserve more wealth. Well, Matt, thank you so much. It's been a pleasure having you on the show. And I want to thank our listeners again for listening to another show of Capital Gains Tax Solutions podcast. As always, we believe most high net worth individuals struggle with capital gains tax when they go to sell their highly appreciated business, primary home, commercial real estate, or other highly appreciated asset. Having a clear plan, such as a 1031 exchange, a deferred sales trust, a qualified opportunity zone, is the best way for you to create and preserve your wealth. So until next time, go make it a great day. Go learn a little bit more and connect with Matt when you get a chance to on LinkedIn. Thanks so much.
You have just listened to another information-packed episode of Capital Gains Tax Solutions with Brett Swarts. We hope you enjoyed today's show and found it helpful. Visit capitalgainstaxsolutions.com to access the show notes and to access more resources. Don't forget to leave a review and join us again next time.